Starbucks just releasing updated guidance at its Investor Day. Shares rising the last few minutes. CNBC's Kate Rogers has been following the event today. Kate.
Hey, Melissa, that's right. Just out of Investor Day, CFO Rachel Ruggeri just announced accelerated earnings growth of 15 to 20% annually over the next 3 years for the coffee giant. That's up from its previous guidance given in 2020 and then pulled of 10 to 12% growth. Global comp growth of 7 to 9%. Fiscal year 2023 will be on the high end, depending on how China performs. That'll normalize to the low end, she says, by 2024 and 2025. That's also above the company's previous guidance of 4 to 5% growth. U.S. comp growth increase of 7 to 9% annually over the next 3 years. She also mentioned China will have an outsized performance in 2023 and parts of 2024 because it'll be lapping those lockdowns in the market, expecting normalized comps in the range of 4 to 6% in 2025. Beyond this guidance we just got, so far the day's really been about the reinvention of Starbucks for the future. We heard from interim CEO Howard Schultz laying out his big vision after admitting the company had kind of lost its way. He said cold drinks are about 80% of the summer portfolio. Now about 2/3 are asked to be customized. So the company is reimagining stores for this. They're investing $450 million in North American stores next year to modernize them with new equipment, more efficient setups, and reduce complexity for workers with automated ordering. Also going to be diversifying the portfolio with more pickup, drive-through, and delivery, and mobile order and pay will be coming to licensed stores in airports and supermarkets. And Schultz also mentioned this morning that the company plans to build some 2,000 new locations in the U.S. by 2025, Melissa. And as you can see, stock is up just over 2.5%. Back over to you.
Kate, thanks. Kate Rogers. Tim, this is what you want to hear from a Starbucks, but at the same time, you sort of don't want to hear it because putting out some bullish guidance may not necessarily be the thing that you want as an investor to hear from a company at this point in time.
Or hearing that they've lost their way, although some of that's not a real stretch and hard to understand. The first cold beverage I have from Starbucks, the next one will be the first one. And I just think about what they do need to do to improve the efficiency inside of the store. So it's great that they're going to clean that up. I think more importantly, let's focus on international growth for a second, where they said 40% growth over the next few years and profits will double. But that store growth internationally will be 30% over the next 3 or 4 years. That to me is, and it's not China reliant. And I think that's, again, leveraging off of the new CEO's international prowess. And I think this is where you're going to get the growth out of Starbucks, even though the U.S. is really the cash cow and the same store sales comps that actually have been supporting this business for a long time.
So a few things. We often see a new CEO who sort of resets the bar.
Right.
So we didn't see that. That's sort of interesting. So they must feel confident. However, so what is the right multiple, though, for Starbucks? And at this premium to the market, with, I think, some still headwinds and I don't get the sense. I mean, I don't think one can rely on China coming back to where it was. I think tensions are much greater now than they were. And assuming they get out of COVID, and I believe that will happen. So it's not for me, not at 30 times. And the market multiple is, I don't know, where are we?
So it's not just
20?
the lockdown ending and
Right.
customers going back. It's this sort of punishment, perhaps, that Starbucks
Right.
should have because it's an American brand.
Exact. For 20 years, every brand that has gone, not every, so many brands that have gone into China have found tremendous growth. And I feel like that growth is behind us, not so much in front of us.
Yeah, but to say nothing of just if you even ignore China, they have such a problem with labor as it is, right? They're under tremendous pressure from unions. I read somewhere that a quarter of employees right now quit within the first 90 days. That is not positive in terms of your ability to retain people. So I think the changes that they need to make in the store to make them more efficient and more pleasant to work in are pretty meaningful. But it's going to take a meaningful investment in terms of just labor costs, but also renovating a lot of these stores that haven't been touched in years.
Yeah. BK, Tim pays $4 plus for a venti drip coffee. Venti, I think, is large in fancy Starbucks terms. I don't know.
It's 20.
They might have to. I mean, if labor costs more, as Julie says, then and things cost more, they might have to pay. They might have margins compress unless they're able to increase the price that Tim is going to pay.
Yeah. So in a different environment, this guidance would be met with all kinds of cheers, and the stock would probably be up 5% or more in the after hours. But I don't know what kind of cold drinks they're drinking over there, what kind of cold beverage they're drinking, but there's nothing that I see in the world that looks like an environment where you're going to grow sales for a $4 Vente, which I believe Kim calls 20.
The stock right now is still up, though, 2.75%. Just when it looked like the supply chain crisis was easing, with parts of the system getting back to normal, there's a new threat to the system. We are just 3 days away from a potential massive rail strike. Both the union and management are about to exhaust a mandated 30-day cooling off period. What could a strike mean? It'll mean that everything from cars to chemicals to energy to food to fertilizer could be stuck in rail yards, causing billions in damages to the economy each and every day. This is yet another part of the inflation challenge. CNBC's Larocco has been covering the talks. Lorianne, where do things stand right now?
Well, we have new news this evening, Melissa, and so the Association of Railroads spoke with me saying that if an agreement is not made by Friday, they are not locking out the workers, and that's really important. So it really is up to the workers if they want to come to work on Friday. The other thing is I am seeing a change in tone, if you will. Union Pacific, their comment 24 hours ago was much more corporate, saying that they were looking to have an expedited decision made. Now you see more warmth coming into this, where they're saying that they understand their employees and that they're in active discussions when it comes to this this whole measure of them wanting to have unpaid days off so they can go to the doctor.
So does that warmth mean, in your view, that it's just going to be more difficult for them to come to agreement, and so they have to sort of be a little nicer to the other side, so to speak?
From what insiders are telling me with knowledge of the negotiations right now, the railroads are trying to have a more conciliatory tone. I'm hoping, based on my discussions with the head of the labor union, who said, if we don't get these free days off, so to speak, we're going to strike. I'm hoping that we're trying to see some sort of meet in the middle.
Yeah. Just quickly, Lorianne, if it happens, could other workers strike in sympathy? Could this be much more than just rail workers striking?
Absolutely. There are other railroad workers and other aspects of the industry, like the ports, and so we are hearing that there are some possible strikes that could arise at some ports around the nation.
Yeah, and we know that hazardous materials, already those shipments have been halted. What's next here?
Pretty much you've got frozen foods. So starting tomorrow, you're not going to have, BNSF is actually going to start rejecting these refrigerated cars to going into the port. You also have Amtrak stopping certain passenger lines, and Canadian Railways, they've actually stopped receiving exports as of the 15th. So there really is a trickle-down effect, if you will. And remember, trade is very hard to turn off and to turn back on. So every time you have something shut down, it just adds to the restart time, if you will.
Yeah. Lorianne, thanks so much. Lorianne Larocco with the very latest on this rail strike. Brian Kelly, it feels like investors aren't really factoring this in too much in terms of what it could mean for even just the consumer at the grocery store. I mean, psychologically, you're paying more for everything, and then you might be paying even more because it's in shortage.
Yeah, and you can't get it, even if you want to pay more. So, yeah, I do think this is a big risk on the horizon that a lot of people aren't looking at. I mean, the hope is that they come to the sides. There's been some very tough talk, particularly from the union side. The letter that they sent this weekend was pretty tough talk out there. So I think they're very serious. And to your point is that, listen, if they're already shutting this off. So this is going to have a little bit of an impact because they're shutting this down. It takes days and weeks to turn this stuff around. So you really hope you don't get it. But in the bigger picture, this is exactly why inflation is sticky. They're getting wage increases, and every union out there is getting wage increases at this point. Therefore, your demand, at least for the stuff that you need, like oil and gasoline and heat, probably stays relatively stable, which means prices stay pretty high. Then if you add in some kind of supply chain shortage, then you're definitely going to have a longer-term inflation impact. So this whole story wraps a lot into it, but you have to watch it for this Friday.